When it comes to managing your investments, there are two strategies to consider: active and passive. Many investors use a combination of the two in their portfolios. To help explain why and how the strategies differ, Everything Financial's Peter Sashecki joins us this morning. Good morning, Peter. Good to see you. And I know you're not in Canada. You're in Australia right now, and it's after 1 in the morning there. Talk about dedication.
1:45, so there will be a Thursday, Carrie, because I'm living proof.
Wow. Well, good for you. Well, thanks for taking the time to join us this morning to explain these type of investment strategies. And I have to admit, this is something that I don't think we've talked about before, so I'm learning something new here. When we use the Toronto Stock Exchange as an example, when it comes to this index, what would active investment management look like compared to passive?
Well, the last peak of the TSX was around November 12th, 2021. It finally, the other day, got back to the same level as 2021. So you've earned zero, or the TSX has earned zero since November 2021. So I analyzed 3 of the top active investments from portfolio managers in Canada that are their benchmark. So what they basically measure against is the TSX. They were up between 19 and 23% over the last 2 years and 4 months. That's a pretty good rate of return based on a TSX that is flat over the same length of time.
So in one scenario, Peter, would it be beneficial for investors to combine active and passive strategies?
Not that I've ever seen. not based on what I've looked at over the last, I did an analysis from 2000, so 24 years. And I've seen the active portfolio managers in Canada, the leading 3 managers, are outperforming the passive, which is the mutual fund investments, in every scenario I've looked at. Now, these aren't speculative type investments. These are your mainstream investments based on TSX, Dow Jones, European markets. So they're the stuff that every person would really invest in to just keep a basic portfolio as part of their financial plan.
Okay, so aside from the returns, there's also the fees that come with each method. Is there one that's more costly than the other?
Oh, the mutual funds, which are passive, are in Canada the highest embedded fees, and they're non-disclosed. Remember, the mutual fund people, companies, whatever the case may be, the major banks, they're not fiduciaries, so they answer to shareholders, not to the client. So they're the most expensive embedded fees. The next ones would be the ETFs, exchange traded funds, which are a stripped down version, which we've talked about on this segment quite a bit. And it's funny, when you look at those same returns from that same period of time of 2021, the worst return was the mutual funds, and they were actually negative, the 3 leading mutual funds that I analyzed. I mean, there's lots of other mutual funds, so I looked at 3. The next is a slightly positive return were the ETFs, which makes sense because they're the same as the mutual funds with just less fees. And they were all around -4 to about +3. So really close to the TSX, but they're passive. So they do mimic the TSX. And then way up there at the 20% level was the actively managed portfolios based on the TSX that I looked at.
Okay, so quickly here before I let you go, Peter, what sort of risks should people be aware of when it comes to active and passive investment management?
When you're using ones that just mimic the TSX, it's the same level of risk with both. I mean, both mutual funds or portfolio managers use custodians, so your money's safe from someone taking it is the same. So it's those portfolios that I compared were the exact same risk level. So there's no difference in risk in those cases.
All right. Well, Peter Sashecki joining us live this morning from Australia. You can go back to bed now. I don't know if you
back to bed. Exactly. No.
But thanks for.
Don't worry, Carrie. That will not be a problem. But next week, in studio with you.
Okay. Looking forward to it. Enjoy the rest of your vacation. Peter Sashecki with Everything Financial.
All right.
Thanks, Peter.
Have a great day.
See you soon.